What is up, guys? I'm back here again with another one. In this video, I'll be sharing how you can catch some nice scalp trades using momentum from the higher time frames. Sit back, relax, and enjoy. So right now on the monthly time frame, we don't really need to go and look at this past data because it's irrelevant. We're trading prices currently here. So, to a certain extent, what's actually happening over here can give us a lot of information. And the information being portrayed right here is that the market has been selling for the past almost half a year. Okay. So that immediately gives me a sell bias to a certain extent. Okay. And then we obviously scale down. We head over to the weekly time frame. And you're going to have to forgive me because what happens is that on MetaTrader, it squeezes the charts. So you can't really see what's happening. But yeah, we'll try to play around with what's there. On the weekly time frame, once again, if we're going to look at what's relevant, is the fact that for the past 1, 2, 3, 4 weeks, we've been going down. There's that sell momentum, okay? And while we're on this chart, I think this is the last previous high, the most recent selling order block on the weekly time frame, such that, it would be smart for us to speculate that if the market is to come back in there, we would sell. But that is so far-fetched, because if the market has been selling for all these 3 weeks, you can't just assume that the market is about to go and reverse all that movement and come back there. We have to play and use what's there. And what's there is that we've been selling for the past 3 weeks. And if we're going to do anything that will favor us in terms of probability, it's highly likely that if we look for sell positions, we'll actually be able to profit. Now, let's head over to the daily time frame. And finally, the market structure has become clearer, or should I say workable with. Now, on the daily time frame, what we're seeing is that the market was printing lower highs and lower lows. You can clearly see high, lower high, and so forth. But the most important thing that I want to discuss with you guys is a trade that I assumed one could have taken today, seeing as when I looked at this chart earlier, I realized that there was a selling order block here on the daily time frame. Okay. And yesterday, what happened was we got into that selling order block and today's candle formed and we had a sell momentum, meaning that whatever sell pressure was in there, whatever supply that was in there was actually activated. Okay. Another thing that made me want to say to myself, this is a highly probable area for a sell, is just in terms of market structure, what's been happening. You can clearly see that the market has been forming a somewhat a channel, right? And one could say that that's the top of the channel, and this would be the bottom of the channel. The market is actually channeling to the downside. Whatever the case may be, all you're trying to do really is to always find, as many reasons as possible for you to take a trade in a specific area, right? So we are channeling to the downside. Another thing that is happening is that we have touched this selling order block. And I don't know if you can see this. We also have an X support level that happens to be in this zone. Okay. So this was a clear level of support in the past. We bounced there and we bounced there. So in terms of this zone being a highly probable area for sells, when the market got in there, one could really be excited for a sell movement. But now here comes the scalping strategy. You're not trying to create a supply area and say, look, I want to wait for a key point of interest. You're a momentum-based trader. And I want you to understand that momentum does change sometimes. That's the unfortunate part. And that is when we take the losses. But if you really concentrate and try to spot and then try to time carefully when the momentum is kicking in and you implement the market structure rules that we always talk about, you are going to really be able to scale in. So what does that mean? Essentially, we're expecting supply from this zone, and we usually use the daily candle. Hence, it's called the daily candle strategy, right? We'll talk about how we use the 1 minute on it and also all those things. But when you wake up today and you see that this candle has selling momentum, I want you to understand this is a daily candle. This candle formed from 2 a.m. Central African time yesterday. It's been going down. And of course, that momentum is important. But before you go and you start looking for sells just because the daily candle is selling, you should always understand that a very important aspect of that movement should be that it's selling from somewhere significant. It should make sense, i.e. the stuff that we just discussed, that on the monthly we are going down, that on the weekly time frame we've been selling for the past 3-4 weeks, and then on the daily time frame we are forming lower highs like that.
all right? And we also have an X support turned resistance, and we also have a channel. Can you see how many reasons there are for you to be thinking along the lines of selling? So it's not just that, the daily candle is red, boom, let me jump in. No, it's red, but where it started being red from is a highly significant area that we can say to ourselves, a supply movement can emanate from there. All right, cool. Now, how would you be trying to ride this momentum on this specific daily candle? So now, the purpose of this session is so that as well we can back test. This is how we get better. If you're going to catch these things, you're going to need to go at the end of a specific day and do some revision and say to yourself, the next time when I see a daily candle moving from a significant area, throwing momentum, how can I get in? And that information, if I can give you a tip, is you shade the candle that you're working with, right? You understand market structure. First things first, all right? If we have a high over here, okay, this is your high, and price came and formed a lower high here. What that means is that we also have a low here, and if we're going to the downside, we're probably going to create a lower low. For those of you that don't understand what I'm saying, this is exactly what I mean. We have a high over here, right? Price comes and forms a lower high. This is a low. If we're going down in terms of market structure, that means that we're probably headed to create a lower low. But you don't have to be over ambitious. Like I always say, let's go to the line graph. All you can do is to mark your target and to make your target the most recent low. Okay, so this is the high that we have from the past, right? Price came in yesterday, formed this lower high, and we had this low to look at. And today's daily candle is this movement. This would be your target for the day. And your target has already been hit. You see, it's already throwing a wick. Maybe it wants to go up or whatever it wants to do, but you would have gotten out of there, right? So now my thing is today, your red line, that horizontal line was your target, and your trading opportunities are located in this gray zone here. So now I want us to go and investigate together on the lower time frames entries. How do you enter? Because at least now you know that, okay, I have a most recent high. I know that I have sell momentum and I have a target. Now the question becomes, where do I enter and where do I put my stop loss? Now, before we even head over to the lower time frames, I want to make sure you understand that the lower time frames is an actual jungle. It's very noisy. And most of the movements that take place there are there to throw off amateur traders because they concentrate on the lower time frames. So on the lower time frames, what you're likely to come across is on the M15, M5, M1, is you come across impulsive movements to the downside, corrective legs, impulsive movements to the downside. And for as long as we haven't reached this target or that area we're calling our target, your best bet is to always get in at the most recent impulsive move, right? And you hide your stop loss, okay? And you let things play out until price reaches what you deemed your target would be, okay? But a frustrating thing is that at times on those lower time frames, price will throw an impulsive move, hardly come back, continue to the downside, hardly come back, or even come back sometimes to the most recent impulsive move, act like it's spiking it, right? And if you're not careful, you get thrown off and think, why am I getting stopped out? But what usually happens is if it's spiked this most recent impulsive move, there's another impulsive area that it might want to go and mitigate, and then it continues to the downside. So this is why at times, you get the drawdown, or sometimes you enter with this strategy and you realize, damn, why is it going against me? And then it just goes to pick up steam, and then it continues your way. So I think this is a challenge that we faced on one of the setups where we're in heavy drawdown, and then the market ended up going into profits, and then it ended up slightly going above break even. It was kind of disastrous. But for me, it's always a learning curve, because I want to go back and look at what the market has been doing. So before we go and look in here to see how we look for those entry opportunities, what am I saying? I'm saying that your best bet is on those lower time frames. You want to see where there's been impulsive movements. They'll obviously be coming from selling order blocks. The market sometimes comes back and continues. That's good. That would be great news, because if you can catch this, this is a really great move. And then sometimes, all right, we just have that. and it keeps going. So if your daily target, if it makes economic sense for you, for instance, to enter while price is here, even though it hasn't come back here, in the fear that it's not going to come back there, if your daily TP level is the same, right, as what you would put your stop loss, as where, okay, I want to word this properly. If the distance to your daily take profit level, this is your speculation, where you want to take profits. If it's the same or more, right, then where you're going to put your stop loss, you can enter anyway. So what does that mean? Yes, essentially you want price to come back to this impulsive move, but sometimes it doesn't. So if you enter here and you shove your stop loss there, it's okay for as long as you know that your stop loss level, right, is the same, okay, if not less than this speculation, because everything is about risk to reward. I hope it will become clear as I scale it down now so that we look at today's movement. Let's remove all this scruffy stuff. And then I want us to look at today's movement right here. And let's go to the lower time frame. So lower time frame is M15, M5, M1. Sometimes I use this on the M1. And look, it allows for you to scale. No jokes. It allows for you to catch the juicy trades whereby sometimes you're really getting in a lot of return. But it doesn't, it's also a bit somewhat risky. Okay. You get to see that the more you practice. So I hope you see that this is that movement on the M15 today, okay? And if we're to go to the M5, things will get clearer. So let's look at how the market moved today, okay? So a tip that I want to give you is that when the market is moving down or up, it will always show intention. The intention is marked by the impulsive movements. The non-intention will be marked by the corrective movements. The intention is the impulsive, corrective is non-intention. Intention, impulsive, corrective, non-intention. So by just merely looking at this, you can see that this is a selling market, okay? And that might be over because as you can see right now, it seems like this is an intentional movement over here to the upside, and this might be a correction, and then so forth. So in part of my mentorship, I talk about this with my students, about like looking at the momentum in a market and how it can show you what the market is doing. But now, let's not digress. On the M5 time frame, this is what's been happening today. We knew that our target was somewhere around here because of the analysis we did, and we needed to find a way to enter. And we have said that the best bet is if you see an impulsive movement like that, you really want to wait there and then you wait for the market to strike. But can you see that it hardly does sometimes because the market is really selling? So now my question then becomes, why can't we, if we happen to look at our chart and fine, we're in the middle of nowhere, we're in no man's land, we see that the market is probably somewhere around here, but we have that impulsive movement. Why can't we then enter and then we shove our stop loss there, hidden, knowing that our target could be all of this? Note, this is why you will get drawdown sometimes, but look, drawdown doesn't mean panic, especially once you've gained trust in the strategy and you do what I'm doing with you right now. This is also a lesson on how you revise, how you have to do revision, okay? Because you can't be that trader who wins a trade and then you don't go back to see why you even won. Or worst case scenario, who loses the trade and then you just say, the market derivative, and you make those funny jokes. For some of us, when I take a loss, trust and believe, I'm sleeping late that night trying to see how I can better. Of course, losses are part of the game that you're never going to be able to completely eliminate, but you have to also be competitive in life. You can't just lose and smile all the time. All right. So what do I mean to say? This is how you revise. So we have those impulsive legs, okay? And we are hoping for the market to come in there, and it's simply not doing so. So I'm proposing that for as long as my TP level makes sense and I'm in the middle of nowhere, for sure, I am going to place an entry and hide my stop loss, okay? I'll place my entry in no man's land, hide my stop loss, and I want to enjoy the ride. What if I opened up the chart? I know that price is headed to my TP level, and this is what I see. I see a nice impulsive leg like that, and the market is somewhere around here. I will enter still. What am I doing? I'm hiding my stop loss there because it makes economic sense. This stop loss distance is the same, if not less than where I'm speculating my TP to be. All right. Same goes for here. just understand that the nearer you get to your TP, the higher the risk, because you're now reaching that low. We discussed that daily low where the demand could start kicking in. So if you're not careful and you start placing sell positions, this is you thinking this impulsive movement will hold, and now that's what could start happening to you. So just understand that as well. I mean, a bit of common sense would tell you that you want to enjoy this ride here, right? For sure. But it's also a game about, it's a game of stop loss placement and understanding where you're headed. And that information you get on the higher time frames. That's what I always mean to propose. Okay. So in terms of entries, I am seeing some impulsive movements, and maybe some of you are wondering or asking yourselves, what does he mean by impulsive movement? Look, impulsive movements are those movements that are self-explanatory on your chart, right? You don't need anyone to show you that this is an impulse. Impulse basically means that the candles are high in volume and there's consecutive candles that are the same, basically consecutively, showing you that supply has been pumped into the market.
All right, so there you have it. Make sure you revise and practice this strategy on your charts. You will thank me later. Also, follow me on Instagram, where I show how my team and I catch these amazing opportunities. Feel free to contact me for access to my services. My contact details and link to my Instagram are in the description of this video. Until next time, ciao.